pretty close to where it is right now. I do think it's going to be fairly quiet, but I am looking for a break above here. Stop this time is going to be 37 pips. To put it, if we put it at 30 pips, this would put your stop right at 2.0100. Remember, that's a bad idea. You never want to place your stops near these round numbers. Now, I've got no problem entering there because of the stops, you might get the market getting sucked up and taken along to the upside. Short trades, I am looking below 2.0087. Now, why am I picking 87? Because that's going to clear these lows here, get the market down near this low. I think at that point, you're going to see a momentum really start to kick in to this marketplace. This stop a little bit smaller at 32 pips. Okay, that's going to put it just back above these other highs, but not so far that you're way up here. Okay, so looking at what's going on, you can see that there's this pennant pattern which is starting to form, coming right into the prior week's low. That's this line right here. And it's important to note that this is a very classic way that the market will break through support and then see that support hold. You see, the one thing to really pay attention to with this is as the market is nearing this support, you can see here that volume stayed high. It stayed above average. And then when the market finally did crack through support, there was a big volume spike. Volume moved up here, and while volume stayed relatively high, I mean it was average volume, you can see that it wasn't big volume as it got back here to resistance. Okay, so here's support, remember this is the last week's low. Now we've got resistance right there. We're going to need to see much more volume than that in order for the market to break through. So it bounces off, comes back up, can't even make a big rally. This, by the way, is a little dipper. Little dippers coming in on low volume. That's exactly what you want to see. So the market then continues to move down. All of this is very important to note. We've got to remember this is near the prior week's low. We're starting to see this pennant pattern form. Everything pointing to a momentum move one way or the other. I am biased to a little bit to the downside at this point. I have taken the liberty, I don't know why I can't move my chart here. I have taken the liberty of drawing in this trading lane. You can see this beginning to form on the hourly. Quite obviously the market has formed even a much larger channel. So here from July all the way here into August, you can see that the market has been heading down. If we go to the 240-minute bar, you can see here as well that the market is definitely confirming the downtrend. The market is, in fact, working on a midterm downtrend. I believe if the market breaks below this July low here, then that's when we're quote-unquote officially in a midterm downtrend. Short term is down. Midterm at this point is still up. Long term at this point is still up. But we are in a mixed trend, and that means we can possibly start looking for some counter trend trades. The trade that I'm looking at for today, though, is really just more of a classic pennant breakout at this point. If the market does manage to rally back up to this line here, I think I would be looking to take a counter trend trade. Also, if the market does manage to hold this line down here, then I think I might be also convinced in taking a trade back to the upside. So anyway, we're looking at taking the pennant trade here. You can see it even on the 4-hour bar, waiting for a break back up. The ultimate target is going to be here well above 280, maybe even about 2.0300. A break to the downside, of course, if the market can break through here. Remember what I was saying last week, we're coming right back into 99.80, so you got to be ready for that kind of a move.